How many people do you know that get a tax refund every year? Money quote of the day comes from Calvin Coolidge, who said, "Collecting more taxes than is absolutely necessary is legalized robbery." And today we're going to jump straight to the board to go over our real-world rule of money, and we're going to continue with the theme of the last several episodes on taxes. So we're going to talk a little bit about taxes, but more specifically tax deductions, tax exemptions, and dependents when it comes to our taxes. But the real-world rule of money that we're going to be discussing is the concept of what an exemption is, and kind of playing a little bit off of the Calvin Coolidge quote. So, how many people do you know that get a tax refund every year? What's funny is sometimes you go to like a family dinner, a family outing, or you're with other people that you work with, employees or whatnot, and come about April, it's almost like a little competition where, you know, the second that you get your W-2s back and you get your 1099s, and companies legally have to get those out by the end of January, and people just rush off to their tax man and they're filing as fast as they can. And why are they doing that? Why are they filing as fast as they can? For the most part, people are doing that because they want to get their tax refund as fast as humanly possible. And then a lot of the time, people will get that, and what do they go do with it? Right? I wish that everybody would save it, but as we all know, that's not always the case. And so they get a tax refund, and so the question is, what is a tax refund? And by definition, a refund of something is when, one of two things, is when we take something back to the store and we give it back, and then they give us a refund of our money. Or if we've overpaid for something, then they refund us back the excess. So imagine this. Imagine that your electric bill comes in the mail, and it says that your electric bill is $120. And then you said, it's $120, and you wrote out a check for $200 and sent it to the power company. What would probably happen? Well, one of a couple things is going to happen. One is they're going to either give you a credit for the next month, so that when you send in your bill, you kind of get a credit of some kind, or they would refund it back. But then you think if you did that 2, 3, 4 months in a row, overpay, it might cause them to get curious, and you might get a phone call from the power company saying, you know, Mr. Davis, we noticed that you're overpaying your electric bill by $80 every month. You know, is this something you're aware of? So why do I bring that up as an example? Well, the IRS, as far as how things are collected, is almost the exact opposite of that story. How often are people actually sat down and shown what they owe in taxes and then pay what they owe? The majority of Americans overpay their taxes. And so then as they overpay, is it a credit for the next month? You know, if I owe $1,000 in taxes this year or this month, and then I owe $1,000 next month and $1,000 the following month, do they measure it monthly? They don't. They measure it annually. And so as I overpay potentially each month, no one's even helping me calculate that until the end of the year. And then at the end of the year, if I overpay, I get a refund because I overpaid. At the end of the year, if I haven't paid enough, then I owe. So what a lot of people think is that if they owe the IRS at the end, that they did something wrong. They didn't do anything wrong. They just hadn't paid enough throughout the year. And if they pay in a lump sum at the end of the year, it's not a penalty of any sort. It's just that they didn't pay enough. And so the trick when it comes to financial planning, a big part of it isn't necessarily the money that you make, it's what you get to keep. It's not what you make, it's what you keep. And then if there are people, if we're falling behind every month, but we're overpaying the government, you think about that, how much of our money that we overpay to the government in our taxes, how much interest does that earn? Zero. So it goes off to the government, it earns zero, yet we're falling behind, so we have to get a credit card, swipe the credit card, or go into a line of credit of some kind, and now we're paying interest on that debt. So we pay interest on debt while we send a whole bunch of extra money off to the government earning 0% that we can't get to. Then we get to the end of the year, we rush off to the tax guy to get the refund, we get the refund to pay off the credit card bills, but all that interest that we paid the whole time, I mean, it's just such a crazy rat race that people get into that it's just totally unnecessary if they were schooled in the ways of money. And so every year we go get a job, and they give us a form that's called a W-4. And on the W-4, it gives us a whole, it has a big list of instructions at the top, and then at the bottom, there's a section that says, if you're married, or claim 1 exemption if you're married, claim 1 for every child, claim 1 for yourself, claim 1 for, and it gives all these examples. Is that the law? And what's interesting is that it's not, and some people know that, and again, some people don't, but it's finding what is the right number, because the absolute best tax position, and again, I'm not a tax advisor, what I try to do, one, is just educate people on how money works, but then second is make sure that they're not overspending on something that they shouldn't overspend on. Obviously, someone should consult their tax advisor before they make any tax move, but it's just understanding what these things mean, then going and seeking, whatever. If they have an attorney, talk to them. If they have a CPA, talk to them. I'm a licensed financial professional, but not tax or attorney. So let's say, for example, when I was single. On that form, how many do I claim? Well, 0 to 1 is what the HR director told me because I wasn't married, didn't have kids, et cetera, et cetera. And so how it works is our exemptions, as our exemptions increase, what they take in taxes from our check decreases. Okay, so if I want them to take less out of my check, then I increase my exemptions. But again, there's kind of that break-even point somewhere where when I hit this point in my exemptions is going to be where I actually pay what I owe in taxes. And so when I was single, they tell me to claim 0, or if you're married, or whatever situation you're in, if you're claiming 0 exemptions, well, that's the lowest you can claim is 0, unless you're asking them to take extra out of your check, which you can do that too. But then what are my taxes doing? If I'm claiming low, the amount of tax they take is high. And that's that inverse there. So the rule of thumb is, well, how many exemptions do I claim then? Well, it's several different factors. If it's the first year you've been on a job, it's kind of difficult to figure that out. If you've been at the same job, similar income, similar amount of kids, your situation's kind of been the same for several years, then it's a lot easier to figure out. But again, talking to a tax professional or a CPA or tax preparer, they can help a little bit more. But when I learned this rule, I was still single, and I met with a tax professional, and he looked at my situation and said, you could actually raise your exemptions to between 4 and 5. And I'm like, yeah, but I don't have any kids, and he says, that doesn't have anything to do with anything. This number that you write on your W-4, the only thing that's doing is communicating to the employer how much to withhold from your check to send to the IRS. It has nothing to do with how many kids you have, or how many houses you have, or how many wives you have. That doesn't have anything to do with anything. He said all it does is just tell your employer how much to withhold in taxes and send off to the IRS. And so I went ahead and I raised it to 4 or 5, and then that increased my paycheck. because they weren't deducting that from my check anymore. And then at the end of the year, I went to file my taxes, and I still got about $1,200 back. And I was sort of upset because I'm thinking, man, that $1,200 was just sitting with the IRS doing nothing. But it's really hard to like break exactly even. But you try to get as close as you can, because then you're putting your money to work for you instead of putting it to work for someone else and then waiting to get that money back. Because that extra that we send to the IRS, we can't get to it. We can't spend it for Christmas or ask for an early refund if we wait until at least the 1st of February when we can get all our stuff together and take it into a tax person. So here's the rule of thumb. So that's kind of a preface to the kind of a simple rule of money is finding out, meeting with a tax professional, and finding out what is the proper amount of exemptions to claim. And the rule of thumb is for every one exemption, 2, 3, 4, 5, every one that we claim equals $50 per month more in our paycheck. Does it always come out to be that? No. But if you're trying to figure out, okay, we've been at the same place for a long time, we want to change our exemptions, how many should we change it by? Well, the best way to do that is you get with your tax professional and you look at how much did we get in a refund and how much of it was tax credit. Because if you're paying for school, you've got kids, you pay for certain things, then you're going to get tax credits. And you're going to get those no matter what you do with your exemptions. Okay? But the refund comes from an overpayment of taxes. And so let's say that this refund, to keep our math easy, is $2,400. And then we have like $2,000 worth of credits or whatever. So our total refund would be this plus this, right? But just the refund portion is $2,400. So if we divide that by 12, our answer is 200. So that means, according to that, I overpaid $200 a month. So if the rule of thumb holds up that every one exemption equals $50, if I increase my exemptions by 4, because 4 times $50 is 200, then if the rule of thumb exactly holds up, then I would start seeing an extra $200 a month, or $100 in a paycheck if I get paid twice a month. And so in working with different people over the years, I've had them go talk to their tax professional, find the number that's the best to raise it to, or they can just try it. Raise it by 1 and see what difference that makes in your paycheck. And if it's $34, then we kind of know what to do. If they raise it by 1 and it increases what they're getting in a check by $100, then we can adjust accordingly. And then by doing that a few months, they can take it to the tax professional and say, hey, here's what I've done, here's what I've changed. If I keep doing this by the end of the year, where am I going to end up tax-wise? Because I want to break even. I want to figure out how to break even where I'm maximizing, putting my dollar soldiers, putting them to work. I want to put them to work. I don't want to just be working and working and working and working for it. I want to put these precious dollars to work. And so that is how exemptions work, and working with your W-4 to try to break even as much as possible. So there's our real world rule of money for the day. Okay? So that leads us into what we're going to talk about